All right, everybody, how we doing? Hope well. Okay, typical disclaimer. CFTC Rule 4.41, hypothetical or simulated performance, has certain limitations, unlike actual performance record. Simulated results do not represent actual trading, demo, whatever they want to call it. Do not use money you cannot afford to lose, and it's my job to keep you going in the right direction. All right, hope everybody's doing well tonight. We are wrapping up 2023, first quarter pretty quick, man. So that's it. We're moving along. Here we are. There's 38 days till April 1st. We are in segment 2 of quarter 1, the second month, right? So next Wednesday we'll start segment 3. And then it's just right here. So here we are. All right, so this is done. Right, we're sitting right here on the 22nd. Right, this is Ash Wednesday. Fat Tuesday was last night. So that's 40 days till Easter from Fat Tuesday. And then, well, from Wednesday morning, right? Fat Tuesday is the party, then the count starts here. So anyway, this is where we're sitting. This is going to put us right to segment 3. So segment 1, segment 2, segment 3. All right, what happened was I used to put the number of days behind us and left, and some people were like, what the hell is that? I was getting stupid emails about what's the 27 behind and 10 left. So I just 38 days till April 1st, try to make it simple for you guys. And that's it. This is the end of the first quarter. So if you haven't done anything here and you're kind of like wondering what the hell to do, it's time to get going, man. This is right here, right? This is the spot right here, what makes or break pretty much everybody I've ever dealt with that has the problem. And that problem is you're excited from January, you're excited about the holidays, you had a nice time off, you're around your family, you made some promises to yourself going into the first week of January, and they start to wane. Parking's great at the gym again, right? Pulling right up to the front, man. Anyway, it's just the way it is. It's people are cyclical. Don't be one of those cyclical people. Do something different. You got to make some adjustments, change your habits, whatever it is, you got to do it, right? Back to this thing. You do not decide your future. Your future is based on your habits. What does that mean? I mean, I could say 5 different ways. It's all the same crap. Basically, what it comes down to is what you get up and what you do every single day. Those one day strung together, 2, 5, 7, a month, 8 weeks, 15 weeks. Those habits every single day, coming in, executing the office, taking care of your body, all those things, that strings together and creates your life. Be kind to your wife, be kind to your spouse, your husband, whatever. That stuff strings together and it multiplies and it creates success and excitement in your life, man. I don't know how else to say it. Haven't talked about this in a while. The emails kind of stopped trickling in. We're going to move on from it. If you haven't listen to this guy's stuff, he's a pretty great guy. So he's got a lot to offer, man. And if you're struggling with some stuff, this is the guy. It's not just trading, man. This stuff resonates in your life, sometimes all the way down your soul, right? It's good stuff, man. I'm telling you, take a listen. And then he has the tools I told you about. He has a couple of different versions. I just got this one up here. It's fine. Audiobook, if you don't want to be bothered. And it's his earlier work. The movie's actually better. Don't waste your time. I did both because I thought there was going to be some questions about it, but we know there was some backlash. You know that shit ended up. So here we are. All right, don't forget, we're still using the audiobook. 12-week year. You should be basing your structural days on this. You should treat every quarter aggressively, every month, every day aggressively. There's a handful of people doing it. I'm going to give a shout out to Alan. He's very aggressive. I don't know if he's mapping off a 12-week, but he's very aggressive every day. And we'll leave it at that. Anyway. And then this is the new book I want to talk about. I'm not going to spend a lot of time. I know how you guys hate this shit, but I know it's mixed, but here we are. Okay, 6 Habits of Growth. This is from Brendan Burchard. This guy's pretty great too, man. He's like another Tony Robbins type of guy, next generation. Tony Robbins is much older. Tony Robbins is more my generation. He's older. Jim Rohn was on the beginning of my listen to the stuff. And Tony Robbins worked for Jim Rohn, and there's some other dude floating around now. I can't think of his name. But he worked under Tony Robbins and broke out on his own. If it comes to me, I'll tell you guys. But anyway, it's pretty much the thing is I've been listening to this shit for about 35, 40 years, right? I'm sorry, that's probably double some of your ages. And it's basically the same message. It's the same thing, right? Six growths of habit. I just showed you the placard that said change your habits. And he talks about some ideas how to get yourself motivated and stay lit. All right, so I I didn't used to believe in this stuff, man. You guys that knew me in the very beginning, this is going on 23 years. I've been teaching for 13 years now, 14 years. The people that met me a long time ago thought like that was probably whacked out. Right? I didn't, I used to say about journaling, oh, the grass is green outside, sky's blue. Take a friggin' trade and quit crying, right? That's kind of probably how a lot of you feel, especially younger guys. And I get it. But as you get older, you mature, you have to figure out a way to structure your life in such a way that all the pieces fit. And that's what happened. I had kids. I got married first, had kids, and that brings up vacationing and ski trips and cruises and all that garbage. And you got to make all the pieces fit and still be in the office and get it done, man. And there's a correlation between being comfortable and lazy, right? Maybe some of you have decent jobs, you're comfortable in your life every day, you're happy, and it's not that much of a motivation for you to get going. But anyway, everybody can change, man. You can change your habits. All right. So like I said, you need to feed yourself some knowledge at least 4 times a week to try to spark some motivation in you. The thing that's kind of crazy is you never know what the triggers are going to be to make you change. What do I mean? Man, it could be anything. My parents died from health problems. Guess what? I got a hold. Well, it was really my sister. My parents died. My sister died right after them, right after my mother, and it was like some health shit, blood pressure problems and stuff. Guess what? You get your shit together when that happens. It's a wake up call. She's only 2 years older than me. That's me in 2 years. You wake up. You never know what's going to trigger the change. It's so sad that it had to be that, but it helped. Right? It was motivation. Right? And the thing is, you could read this book, and it could be something that occurs to you a year from now, 6 months from now, and you're like, damn, I listened to that in Brendan's book, and you know what? Uh, I remember it now. I want to do something about it. Whatever. Life is funny, man. And the more you live, the more life you live, the more you realize that. I know my older people are probably like, yeah, I know. So anyway, for what it's worth, 6 Habits of Growth, Brendan Burchard, audio book only. If you want to talk about it, there's a PDF that goes along with it. You want to talk to me about it, shoot me an email. All right, I've been through it already. I'm kind of going through and making some notations, hoping that somebody bites. All right, man. Email submission. This is probably like this slide. Next slide I'm going to show you is probably like, man, I don't even know, like a great accomplishment for me as well as the guy that did it. And I honestly didn't know if he was going to make it, but I'm really, really super proud of him. I don't have permission to say his name. I won't, but maybe some of you guys recognize the certificate because I know it was posted in the chats as well. But anyway, I want you to know, dude, I'm super proud of you, man. And he said, please join me to praise God Almighty who has helped me thus far. I also dedicate to Steve, Jim, and Carr, who has pushed me to study hard. It took a long time, but now I'm seeing the charts clearer. Yeah, it definitely took him a long time. I love you, brother. I'm proud of you, man. So, and I appreciate him mentioning Jim and Carr as well, not just saying thank you, Steve. Those guys worked their asses off for everybody in the group. Anyway, so what changed? What changed with this guy? I don't even have to ask him. I already know. He did it. He did the work. You know, uh, everyone before him that has the same issue that you feel like you're drowning. I got that email last week, right? I was joking around. Someone called me some almighty type of name, and I was like, whatever, like it's from my mother. I appreciate it. My mother wrote it. So, but anyway, it's nothing special. It's nothing. It's nothing out of the ordinary. It's the patterns are there. Mark up some freaking charts and spend some time in front of the screen. Do some of the drills. Everyone that's done the high-low drill sent me in some markups, made some flashcards, and nobody surpassed Jim in this period, bar none. Jim's still making them every Saturday. So everyone that's done those handful of things, right? And now add the boxes to try to refine the entries when prices move and draw a box, see if it retests. Use a demo account, put some limit orders in there. Box test. It Anyone that's done that, just done the drills, send some markups, ask questions, eventually it's going to trigger, just like it did for this gentleman. But I could tell you the difference was he came in, he thought watching a couple of my videos was going to change the world for him, and it just doesn't work like that. It's like going to the gym for a week and going, how come I'm not buff, man? I'm still out of shape. It's exactly what it's like. This business takes repetition, and it takes you getting in there every day and getting comfortable with price action. Every year I try to figure out a way to make it easier for you guys. Try to say like, okay, drill it down to one pair in one particular time frame. Use the 1 hour for direction, get off of it once you know the direction, and then 5 or 15 and try to identify the patterns. And get in there, do the high-low drill on that pair. Let's say you choose pound dollar. Okay, great. Pound dollar every day, high-low drill. Try to catch the high with a couple of pip stop. Try to catch the low with a couple pip stop and see what you can turn. Max yourself out on 5 orders, 3 orders, and try to improve from there. Tighten the stop every time you do it. It sounds like, I don't know what's the right word. It sounds like horse shit. But that's it. There's no other way to do it. You got to get in there and engage. Do the drills and engage. Congrats, brother. Send me an email back, man. Happy to hear this. Okay. This is like, I don't know. Couldn't be any more timely, is it? So someone said, hey, Steve, I freaking get it. I took a trade last night, and I'm sure they meant the other word, right? Thanks for dumbing this down, or making it PG rated. So I freaking get it. I took a trade last night and had a 20 pip stop. Price moved 15 pips against me and stopped dead. My TP was 40. I had to wait to get what I already had just to get back to even, and then wait for the initial 40 more. So I needed 65 pips just to get my 40. Think about what a pain in the ass that is, right? Think about that. Needless to say, I'm now focusing on refining my entries. Where I heard that somewhere before. If I would have done what from the beginning, I would have been up 15 instead of down. The trade would have been calmer, and I would have hit my limit at least 2 hours sooner. I'm finally coming around to what you've been talking about for the last 3 years. All right, man. I would almost stand up and give them a standing ovation and applause, but you guys are going to think I'm losing it. Okay, thank you again. I finally see it. All right, yes. So, of course, this triggered me to go back from the slide from last year, around this time, by the way, I might add. And it's just pick your style and readjust yourself based on the past trading period or the psychology test. What do I mean? Okay, babypips.com has a psychology test that tells you what type of trader you are. Pick something. You want to do refined entries? Great. You hate me and you can't stand those things? Do a bounce trade. You want to do something else? That's okay too. You want to use 4 hour charts and Gartley's for alerts and then retrofit that pattern? That's okay too. Narrow your focus down to one pair, practice execution at the highest level, drills, draw a box and watch it play out. Experiment with the stop size and the TP and understand what the actual impulses are, test them and learn, and that's how you're going to formulate your take profits. All right? What else? Employ the spreadsheet and make realistic forecasts and projections. That's a big deal, man. The spreadsheet is like so overlooked, and it drives me crazy because if you can make good trades and you have a tight stop, 3 to 1, 2.5 to 1 RVR, you're in a good place. Your account should be growing. You should be progressing. Okay. If you're worried about blowing your money by ramping up your lot sizes, okay, how do we fix that? If you're not trading a prop account and it's your own saved money, then the thing you need to do is you need to double or triple that money and using very conservative 1% risk, and that should help you, but still using the spreadsheet. So if you're 2% risk, drop down to 1% risk, but still scale with the spreadsheet. I talked about this a couple weeks ago, that if you're not adjusting your lot size for the amount of equity you have, you're not employing all the equity. So a 10% return on equity, ROE, right? Next week will be like an 8% because you didn't change your lot size. The next week it'll be 7%. As the value of your account goes up, your lot size has to trickle along with it. And if it doesn't do that, you're not getting the returns that you're eligible for, that you're actually trading through and hitting. All right, and adjust on the fly, but lock something down and learn it, man. A lot of people come in here and they bounce around and they can't figure out what they're doing, and then they come back all the way back around full circle to something I might have mentioned to them in the very beginning. And there's someone doing it recently and he thinks I'm talking to him, but I'm not. You're not the only one, dude. I've been doing this for 13, 14 years now. So you have to figure out what fits with you. But the problem is that you have to go through some things and take some setups and see how you feel. It's back to picking a style and adjust. If you know you're not a fast decision maker, you like to think things through, then probably not refining the entry and using limit orders on a 5-minute chart is probably not for you. If you like to check the chart a couple times a day, then maybe you trade a 4-hour bar or a 1-hour bar during the sessions. And then you knock it off at 12, 1 o'clock. You won't take anything. You show back up at 5 or 6. If you don't have any time at all, you could trade these patterns on the daily. And I'm going to show some of that tonight. Not the daily, but how these patterns just show up everywhere, man. All right, we good? All right. And then finally, right, after you learn something, lock it down, you got to put yourself to the test, man. Go do an assessment. I understand they're free, and do 30 trades in blocks of 10. I've been talking about this forever. Focus on winning the day over winning the trade. People get pissed off when they lose a trade and they come to pieces. Well, is that the last trade you're ever going to take or last trade you're ever going to lose? No. So you need to get your shit together and keep. It's in blocks of 10. It's the spreadsheet is in blocks of 10 for a reason. You're going to lose some, but if you use money management and go look at those when you plug those numbers in that sheet, it's amazing how it's like almost like magic. You could take a losing cycle and put it in the spreadsheet, and had you adjusted the lots, you would have scratched or made a little profit. And that's a fact. Go do it. If you think I'm crazy, go do it. All right. And then, like I said, assessment or challenge, 30 trades, blocks of 10, win the day. Right. We were doing the 3 trade max. Some people don't understand that. I was going to cough and like mumble someone's name, but I think they know who they are. So they get hell bent on one trade, to get bent out of shape over one loss. And it's like, man, you're going to take thousands of trades in your career. It's like, please, you can't fret over one trade. If you can't fret over one trade, you're never going to get out of the starting gate. All right. And then, right, I talked about this. Refine your entry on any setup. 1 hour, 4 hour, 5 minute, it does not matter. It's not a time frame thing. It's an area on the chart. Okay. So this goes out for the email that said they're going to refine their entry now. Just draw a box around the rejection that held and created a reversal, and then see what it does. Look for price to hit that area again, perhaps get a little higher or lower if you're going short, right? Go higher or lower. The more you draw this stuff and trade it, the more proficient you're going to become. And it's demo, and some more demo. And as soon as you start getting proficient, you can join one of these prop challenges and see how your numbers flesh out. Don't make it so hard, man. It's really not that hard. The biggest problem is you don't know where to start. You don't know how to do the work. And I talked about that last week. Got a similar email, somebody saying that they're just overwhelmed. Okay, so where are we so far? We're coming to the end of the, right? Section 2, segment 2 of the quarter. So you should have looked at those candles with no wicks. Only a handful of people sent me some stuff, man, and that's okay. But if you get it and you see it, that's fine. Right? We're stacking the bodies over the bodies. The wicks are important for rejection zones to make entries on, but the volume is thin on the wicks. The action is in the bodies, right? That's why I told you candles are shaped like old style kites, right? I don't know, like I'm dating myself, but it's not as bad as Ben Franklin, man. But look, this is how the old kites used to look. The heavier volumes usually in the middle of the candle, and as you get to the wick area, right? Picture this. This is just a typical candle, and this is how the volume, right? The volume, the numbers in these cells taper down, lower, right? Bring it in, bring it in, bring it in, trap, and then till a couple of cells here are hung up, trap trader, they call that, right? And you could see it, it's zeroed out, and whatever the spread is, the numbers, the digits will be in the cell, and it'll show you a couple zeros on the buy side and the sell side's called, or vice versa. Okay, so we talked about that. We talked about tapering, the candles, the wicks, the bodies. Now, background charting. We looked at some AR boxes, shadow boxes, how they line up. You should be able to walk up to the chart, look at the averages, and look at the background, the boxes, and the blue tracers, and see what the hell's going on. Right? You should be able to formulate some type of theory or directional bias. Your ideas for entry, how you're going to get in. We talked about catch-up closes. I think Joe sent me an email about that. about how do you feel about taking a trade when it closes below the catch-up. That's something I'm going to address probably in the next DMR or so. Okay, so this is where you should be. This is the stuff we covered since this started. I'm coming to the end of the month. I need to tell you what's up. If you feel like, what the hell am I talking about? All right, you need to go back and watch the videos or shoot me an email and I'll try to get you on point. All right. This is the biggest problem for everybody, I guess, right? From the email from last week, how to formulate a theory of directional bias. And I want to talk about that a little bit tonight. So I've been holding this, right? I told you I didn't finish last week, 2 weeks. I think I was off last week, the week before that. This is what your pound dollar chart should look like, because it's all about Bookmap. Remember, I showed you pictures of Bookmap. Bookmap has these, but the problem is it's so cluttered, it has them in every single area. What you want to do is you want to take the major swing points, right, and box them. There's an M formation, major swing point. Stretch it out into time. This actually should be all the way out here, right? It got retested. It took, look at that huge V formation, right, which is part of the bigger structural M. How would you know, right? You might think these are M's, but when it fails to take out the swing point, it becomes a W, right? We're trading above the averages. Trading above the averages over here, we're on an up run. And you could start seeing this like these, right? These 3, 2, 1s in here. You get these pushes, pulls back, starts to count, a fresh W, right? Shoulder, head, shoulder. You guys seeing this stuff, right? Shoulder over here, shoulder, head. This actually just happened yesterday in GBP. I got long on the right shoulder. Okay. So you're pushing these out into time and you're expecting them to be retested, right? I mean, this is not technically right. I'm missing a box over here that got retested, 1, 2. But you need to draw these out completely. Okay. Then when you have a rough idea where you are in the cycle, this piece of the cycle, where are you? Okay. So then you need to go drill it down to whatever time frame you like. These lines should transpose over, and then you can take the landmarks that we've been using forever and you could trace them in and give yourself some directional ideas, right? So look, okay, see it? I took the blue tracer and extended it forward, and it actually created a box. It created a box for us right there. Now, so you want to refine the entry? You tighten up the box right there. So it's basically 3 highs of the day stacking up, or 3 of yesterday's highs back to back to back stacking up. But the thing is, when we designed the indicator, we didn't extend it forward. You'd have lines all over the chart. You wouldn't be able to see which way is up. So this line changes every day. So if you just take it and extend it, or realize it's there when you're drawing in price action, it's going to give you a leg up. And look what happened. It came down, hooked right back. There's 1, 2. Just missed yesterday's high. Right? Look at that clearly again. It's important stuff. This is the stuff that will make or break you. This is actually the high right here, right? So the blue tracer closed and it cut right through the top of Asia. Okay, you take these orange lines that I drew, and the one that's important is the bottom swing. Okay, now think about that. How is Asia consolidating so perfectly right in between the 2 highs and lows, or previous day's highs? That's got to tell you something, right? You couple that with this big flat print, right? I think this was down here, but there should be a flat print on a higher time frame. This should be a big flat print. Okay. This was last week. I was holding it for you. Like I said, this was my projection due here, right? Mild stop hunt drop, but it actually did something like this. It kind of chopped around and then came down, and then it turned. There was money in there. It was enough to make some money, but it wasn't as big a move as I had anticipated or wanted. So that's it. It's not rocket science. Then we know these landmarks, right? So what happens when something falls, a landmark falls in a swing zone, man? That's like something to lean on, right? Look, crossover, right? Pin the water, trap through, pull back. You're trapping through yesterday's high, a water, and you're off to the races. Then there's your bounce trade. Shifts right through take all those zones out, but it's not there's a trade in here when it consolidates up here for a few bars and then takes it out, shifts through like that. Then you know you're going to get a tap back into a level. There it is, continuation, end of day, pull back a little bit. If you get, I'm going to tell you one of the easiest trades in the world right now. If you get a huge push down, look to go long Asia for a slight retracement. It's not going to be always, but it's going to be a lot. If you get a big push down the next day, look for retracement in Asia. If you want to trade Asia, you get a full ADR run or ADR plus, you're going to get a pullback. Why? Because everybody's piling on short. They see the consolidation, then they come out with this crap, and everybody thinks it's going down again, right? And they get crazy and chase it. Then it turns over, stops everybody out, snags them, whatever, and goes in the original direction it was intended anyway. You guys see this stuff? It's right here, right? Okay. So what I want to do is spend the rest of the time together is I want to do like I guess what you call like a walkthrough. Like you should be able to walk yourself through a chart, just kind of like what I just did. Just be able to say, okay, I understand the levels, I mentally see it, I get it, and kind of put an understanding or meaning behind what you see. And this is another drill you can do, or you don't have to do it, whatever. Send it to me, don't send it to me. I'm asking you guys, but I promise you, if you do the work, things will change for you. So I haven't said this in a long time, but it's fact. In this business, hindsight is foresight because it literally happens over and over. You know that like Groundhog's Day movie, or like it's SSDD over and over and over again. The guy tries to live the better life and learn about himself, try to be more nicer to people and have some discovery. Okay, well, guess what? If you're living the same trade setups every day, you're going to get better. The problem is you're not sticking to one thing and focusing, because it's literally SSDD. I don't know how many more times to say literally tonight. It is absolutely the same thing every single day, and you should be able to build some kind of narrative in your mind of what's going on, or storyline, right? So to do this, use a 1 hour or 4 hour chart with 3 to 5 days of data to formulate your directional bias. I just showed you how to do it. Use the Asian range and the first shadow to trade the session. Okay, what am I talking about? 1 and 4 hour chart with 3 to 5 days to formulate your directional bias. Okay, so I like head and shoulders pound long yesterday. Okay, I'm waiting for the right shoulder to formulate. So I'm using what's showing on the previous part of the chart. What I had on the previous part of the chart, everybody had. It came up, went like that, made a big deep V, and then closed above this side of it, and then came in and made the perfect little move out of there, right? Everybody saw it. Okay, so this is your directional bias. I knew what I was waiting for. That was the trade. Okay, now I'm going to use the Asian range and the first shadow box to make sure I'm trading in session. Okay, so I'm going to drop down to my 5 or 15 minute chart. Right, I'm going to use my 15 for intraday directional, my 5 minute to try to pull a great entry and use some limit orders inside those boxes that are drawn. With me so far? Okay. So if I'm formulating a 1 and 4 hour, 3 to 5 day directional, I'm going to go back the last 5 days and I'm going to look at this chart and I'm going to realize that I had a perfect setup for head and shoulder, except there was a question about the shoulder. It could have been this one, or it could have been that one. There was like 2 there. And then I want to project those both out and see where price closes and how it plays into, right? Let's say it was the higher shoulder, I think. See how price plays into and works in this area. We need a break above, and it has to clean out this side of the book, right? And it has to give us what we're looking for. Then we want to try to refine the entry, and you can build an order book. You can build, if you're trading a large size, you can cut it into 3 pieces and try to get filled, and that thing pinned just a hair through the low. I had a couple of limit orders sitting there. and I got a nice spread. I got in, stop was below, and it was lights out. Okay. Eventually, you can take good setups and pre-market if you start to see it. What do I mean? You don't have to worry about the shadow box. Don't wait for the shadow box when you start to get good. But the thing is, if you're starting out and you're struggling, you can't find your footing. First of all, trade in session. Okay, I know Asia is a session, but the issue is that the setups usually occur. The volume hits the books going in from gap time, going into London, and you get that big sharp move. So until you get the sharp move, you have to know where you are, right? So trading between here and here, trading this time right here is not recommended right now. That's no go, especially if you're new. You trade halfway through this box, right? Looks like a candle. Halfway to this box into the red shadow. That's your session. And really, you need to be in something by halfway because they go to lunch, man. It's the thing is, a lot of people in the U.S. and they don't really understand what's going on. What's going on is these guys come in 9 o'clock or 8 o'clock their morning. They work 9 to noon. They take I don't know, a couple hours off. 1 o'clock they come back. 2 o'clock, I don't know, something like that, and then they go 2 to 4. But the damage is done here. They get their orders off, they take care of what they're taking care of, and then they let everybody else screw around here and hand the money. You need to try to grab something in the half shadow box into half of the session. Is it always going to be like this? No. Of course, there's going to be trades that hold the level, news releases that get the activity starting later in the session going into the US. But they're on a time schedule, right? Our stock market opens at 9:30. Okay, well, 9:30, 12:30, 1 o'clock, those guys take off, go grab some lunch, expense accounts, all that garbage, overindulging, all that stuff. But you ever notice there's a lull around the 6 o'clock hour in the London session? It just kind of whatever was happening kind of goes sideways, and then they come back and pick it up. Okay, well, that's why. It's like nobody's home. So when you get more proficient, you don't have to wait for the shadow box. You can trade from 1 to about 6 a.m. Unless you're in something, then you stay with it. All right, so what are you looking for? Higher time frame turn bars, 1 hour, 4 hour, give you directionals off the simple M&W anchor formations. In your mind right now, what's an M anchor? I drew it for you 4 slides ago. A tracer and an average, right? That would give you, and you get a formation like that right there, that becomes an anchor. If the pattern holds, you will consistently generate a measured move back into the range. So if this pattern is developed and it does what it's supposed to do and holds, you're going to get leg 1, right? AB, then you're going to get your pullback, and then you can project based on this. If this number is 50 pips, then you're in for a hell of a ride if you get that. That should be about 50 pips. And I can tell you a lot of times this is bigger than this. So that's what a measured move is. It's the segments, it's very symmetrical. This segment A to B equals C to D, right? And a lot of times beyond. So if you get your grab right here on 2 and it pushes, you get a little bit of a pullback, and then you wait for it to explode through 3, or get off here, get back on, tight stop. You already have 50, 60 pips in the bag for the day. Risk 10 of that to try to make another shot at 40 or 50, or maybe halfway at the last swing, 35. Okay, it's not rocket science, man. You just got to play there and create a narrative for yourself. It's all you have to do. But a lot of you aren't willing to do it. So the idea is that you're supposed to be combining the 2 time compressions, and a lot of people don't understand that. They reside on one chart. Okay, on a 5-minute chart, you get a 5-minute measured move. On a 1-hour chart, you get it, right? You get the point. So if you're looking at a 60-minute chart, a 1-hour chart, 2 or 3 bars is 3 hours. So you're going to take this, okay, well, if you got 3 hours here, you should expect 3 more hours to give you around the same move unless it's a news release. You get in, you're like, oh, I got the perfect M. Why ain't this shit moving? What's wrong with it? Why didn't it go anywhere? Okay, well, you're on an hourly chart. Things are a little different. The idea is to combine the 2 time compressions, decide, execute, and manage the trade. So you look at the 1 hour for directional. Maybe you make decisions on the 15 and you pull the trigger on the 5. What the hell? Yes, what the hell? 1 hour directional, right? Simple anchor formations give you directional bias. Try to execute on a 5-minute and use the 15 to make decisions. Remember, we only make decisions to get out of a trade on closed bars. Right? Because how many times have you been in something, right? And you know I'm gonna say it. I'm not gonna say your name, but I'm gonna say it. How many times you've been in something that does that and it starts pulling back, right? And you're up 30 pips. And you're like, all right, I'm up 30 pips. I'm gonna get my 50. Hits a level, starts pulling all the way back. And you're like, damn it, if I just would have got out at my 30, I would have been fine. And then you get out, you don't want to lose your 30, you take 20, and then turns around and the candle prints the rest of the way down and gives you your limit and you got out. Right? Too many to count? Stop it, I'm hurting your feelings. Okay, look. Do not look at the money. Look at the chart and your targets and how the candles are acting. You could have a wick on this candle, right? But we're back to the body thing. If it closes below this candle, right, and they fit on top of each other, price is still down till it's not. You're going to get pullbacks in the business. Use a guide, use a moving average, use a watermark, whatever time frame you're trading. Use some form of guidance. But for sure, don't look at your ledger, man. Don't look at the bottom of the ledger, because if you're trading a prop account and you got big lots on, if you're trading 25, 50 lots and this thing's moving along and you're seeing 1,000, 2,000, 3,000, you're like, damn, I could pay my credit cards off from Christmas with that shit, right? And then you tap out and you took out $1,200 and your credit card bill is $27,000 and the trade went there anyway. If you just would have stuck with it, it's just about working the stuff, man. And a lot of you aren't doing it. Okay, so we'll build a storyline. I'm gonna try to hold true to my time. We're at 37 minutes. I'm gonna probably just walk through one of these narratives and I'll end it and we'll pick it up next week. All right, so build a storyline. Okay, right off the bat, here's a chart, plain old chart, minding its business. Draw the narrative. What's going on here? Okay, assume that this is the start of the day. What's going on here? In your mind, right? I'm going to come up to this chart and I'm going to draw this like this. I'm going to call this an Asian range. I'm going to draw this initial spread where the dealer's setting the range, the gauge, the range, what's going to happen for the day. I can't get it all out, man. Sorry. All right. So moving averages are up, right? They're pointing up. Expect maybe a break to the high side. Okay, that's a narrative. So I'm going to walk up to this chart. I'm looking at it. I got my Asian range, right? I got my Asian range, and I'm thinking higher. Okay, well, you know what? I'm not 100% sure, but I want to do something kind of interesting. So I want to cut my AR at the AR 50. Okay, now I'm looking at top 1/3. I got high side consolidation. Okay, so this is blocked under here. Got some rejections down into it. Dealer trapped high side. 50's moving up. Flow with the water. It's day 2 of the cycle. Yesterday was day 1. Shifted away. Trapped high side. Shifted it again during Asia. Held the high side. Rejected the lows. Looking pretty good for a breakout high. That's what we get. Now what I want to do. Okay. I get this first leg and I get the pullback. Okay. This closes over here. I'm like, okay, I got something that resembles a railroad track. What do I do with that? Well, this is my first set of turn bars. So if I got a set of turn bars, I want to box these in. Take the tops of the body, stretch it out across into time. I want to get the tops of the wicks, stretch it out into time. And I want to wait to see what happens. I'm looking at this. Okay. Now I'm high side. Okay. Keep in mind that this happened in roughly 1 bar, right? When high side rejected, they hit it again. This opened here, went high side green, and turned inside out and closed red. Okay, so a couple of bars gave me first leg of something. This is not a trade entry, man. You don't know anything from this. You're sitting here looking at these 2 candles. This is not a trade entry. That's a breakout of the Asian range. You could easily come back and paint a W straight down right below the Asian range, or on the, it could be a 50 bounce trade on the EMA, the water. Okay, so now what are we looking at? Got the box projected out forward. Price continues down, bounces off the mustard and starts giving me higher price. Okay, it goes in here, makes a rejection. This looks like my low side, right? This looks like my low side over here. So I want to box this in over here. I want to try to box in the nadir. All right, that's reasonable. So I'm going to box it in. Now, looking at this, got my M formation, my stop hunt high. It's looking good. Okay, now what do I need? I need a rejection of the backside box, and I need them to take out the low side box and retest it. Right? Shift bar through, comes back, hits it. I want to refine my entry now. We're holding below the moving averages right here. I'm going to take this bar and I'm going to refine it right here. And I like a sell limit order right on there, front of the box. Price comes in, hits it, takes me in, very little drawdown. Stop is here, by the way, depending on how wide the box is. If the box is too big, I would move my limit order up to 1/2. Take my chances not getting filled. Okay, boom. Shifts right through, trade's over. Closes below the water. What do I expect next? Some type of pullback into here and down, right? Bounce trade, reversal. Okay, notice some key characteristics over here. Oh, sorry. Notice some key characteristics. This bar took out all the book levels over here. All this. Removed it. Absorption. Hit the stops, right? People that went long here and here and here, they're all triggered out. But it was an uptrend yesterday. Yeah, it was. It was an uptrend yesterday. But today it's not. Okay, so think about this for a minute. It's important. The way the candles form, if it's green, it means that it opened below the close. Low side print occurred first. The candle paints green, it opened below the close, low side printed first. If it's red, it opened above the close and the high side printed first. Stay with me. All right, look. This candle opened right here and turned green for a few minutes, got rejected, and then turned inside out and just dropped straight red. This candle right here opened here, threw a little tail right there, red, turned green inside out, went all the way to the top, and then pulsated down and closed there. That's how they form. It's not magic. Right now, in that little piece of the candle is possibly a micro M or W inside of itself, right? So you have this big M forming right here, but when this does this, you have an M forming right here. When this does this, or a picture like this, inside this candle, there's actually an M being formed. The body goes up all the way to the top, makes up leg one, right? The body pulls all the way back, goes down to there. The body pushes up all the way again, and then closes, and right there. That's an M. Would it surprise you to know that this is a 4-hour chart? It's a 4-hour chart. It's not a 5-minute. It's not a zoom in on a 5-minute or 1 minute. 4-hour chart. Go look it up. GBP a couple days ago. So if you were trading a lesser pattern, right, you might have got suckered in by the possibility of a micro M here or a micro M here, took that short, and then it turned on you, came all the way back. Albeit this is a longer time, but you're getting the point I'm trying to make. Depending on how long the candle takes, if it's a 4 hour, 1 hour, 30 minute, there's essentially M's and W's forming in every one of these at the top and bottom, and then where they open. They come in, price opens, and you'll notice too the candles have pushes in them. So the more candles you go through, start learning, they're just all micros. The previous candle is a micro cycle of the next candle. All right, write this down, take a picture of it, and try to apply it in your world. Okay. Still can stay above for a while, especially 1 hour and 4 hour, and retest the highs and low. That's how the M's are painted. The M's and W's are painted. Right. If the candle opens, it could stay solid green for a little bit, pull back, stay green, back and forth, pulsate back and forth, and it's actually making an M or a W, right? Or stayed at the low a couple times and come up. You'll end up with a wick, but what really occurred was a W or an M on another time frame. So this should show you that the time frame is irrelevant. Find something that works and get moving, man. It's not hard. Right? There's two ways to enter these types of trades I've been talking about. You can enter on the open of the next bar, right? Which would be like a momentum type trade. If you get price moving down like this, and you're certain that that's where it's going to go, then maybe you wait for the next candle to open, and you just pull the trigger, and you might have some draw, whatever. Or you try to find, in this example, higher edge, and you try to refine it off of here, 1, 2. So one would be a momentum-based entry, and one would be a limit order-based static entry, right? If you're doing a momentum-based entry on what you see, waiting for a candle to do something or behave a certain way, then it's a momentum or it's a moving entry. It's fluid. You could adjust it based on what you see. But if you're using limit orders, you're betting your entry on that you got the right call on the boxing it out. All right. Listen, it's 47. I'm over by 3.5 minutes. We'll talk about this chart next week, but I want you to go here and take any chart you like and do some kind of walkthrough and make a narrative for yourself. Try to create it in your head of how things are going to play out. Draw on it, work on it, scribble on it, send it to me, man. This is a mental exercise, and the more you do it, the better you're going to become at it. The goal is to understand price as it's developing so you can anticipate the next move from these guys and then jump on board when it's appropriate. All right. Hey, my wife slipped me a note. Next week is Monday, March 1st. Next Wednesday is March 1st. It's my kid's birthday, man. I'm not going to be in next week. All right. I'm sorry. If I get a chance to make a recording, I'll try to do it over the weekend. But to be honest with you, I make a big deal out of the kids' birthdays, man. They don't have too many more living under my roof, and I want to make them count. So probably not going to be around, and I appreciate you guys. All right. Have a great night. See you next week. Well, see you in 2 weeks. Good night.